Hi and welcome back, friends. So this is a topic which just interests me, and hopefully it interests you as well. It's how the brokers make their money, and I know a lot of people say that they make a lot of their money by stop hunting, manipulating through spreads, and essentially the big market makers make all their big buck by trading against you and taking the opposite side and making money off of your losses and blown accounts, which in as much as that is true, it's very much true. Market makers, that's the whole point of being a market maker. When you make markets, you take the opposite side of your client. And I was listening to like the 1 hour webinar by Lex Van Dam. If you don't know, he runs a hedge fund. He was a market maker before. He was running hedge funds and things like that in his private fund, and he talks about being a market maker. And he was like, you have to take the opposite side of your client. If they're buying, you're selling. If they're selling, you're buying. And it just so turns out that because 90% are losing and they are taking the opposite side, that is their strategy. You are using you are using your own strategy, they are using their own strategy. So in as much as you are saying, okay, this is my strategy, I'm doing X, Y, and Z, and you lose 90% of the time, they take the opposite trade and win 90% of the time based on just copying that you're losing 90% of the time. So whilst you're losing 90% of the time, they're winning by just taking the opposite side of the trade. So we know that, we've established that. But they also charge when, like, obviously through spreads and commissions when you place trades, which is why it's so important to not be lured or tricked into this wave of day trading, which is essentially what Simon Kidd calls the devil. Day trading is the devil because you don't realize it in the moment because you think, okay, I have daily targets. I want to make this target every day. I want to make this target. You don't really realize it every day because you're like, this is my target. I'm trying to hit that target every day. But you actually end up over trading and you actually give more money to the broker because of the many trades you're taking. So if you're taking 5 trades a day, 3 trades a day, you're paying the broker every time you open a trade. So whether you're opening a bigger positions but less in the number of trades, you're still paying more to the broker. The more trades you place, the more you're paying to the broker. So they want you to day trade, and they pay the IB contractors who market these courses to get you into day trading and tell you things like, when I was starting out, I remember they would say never hold a position overnight. And I didn't know about IB markets, IB contracts, and things like that, where they want you to place more trades and to close. So they make money when you open and when you close. So it's in their best interest that you're a day trader. So you want to avoid all of that completely because you're just giving them money in spreads and commissions. And a lot of people actually don't take that into account. They calculate their risk in terms of 1% of their account, but they're not calculating the spreads and how much they're actually paying in spreads and commissions and swaps. So that's where they also make a big amount of money. So obviously the wider spreads means more money, and they make more money during economic events where they basically widen the spreads to the stratosphere. They will widen their spreads like on gold and the US dollar during the NFP. That's where they make their big bucks doing manipulation. That's like news events and things like that. And so, like I said, they take advantage of day traders and weekend holders. You'd rather be a weekend holder than a day trader because day trading, you're not taking into account how much you're paying in spreads and commissions. You're just opening and closing and saying it's 1%, it's 1%, but it's actually not. It's more if you consider spreads and swaps and things like that. And the real big buck is made by the broker and not the trader. I find that really interesting. And while JP Markets was going through their lawsuit, and I sort of covered a lot of that, from the court records, from what they said, they were receiving almost 100 million in deposits in a month. Imagine that, 100 million rands in deposits a month. And so that's where the real big buck is, because they had clients all over Africa, Nigeria, Ghana, South Africa, Zambia, Malawi. And so you can imagine how much they're taking in deposits, how much they're manipulating during news events, or when they say that the system is down. That's also another way they do make money. So if you look at the TNCs, they always say that they're not responsible if the market crashes or if the system fails, right? But the problem with saying we're not responsible when the system fails is that you can never know when it's a real system failure, or they just switch off the machines and then they just say, you know what, system failure. And they do that because they know a lot of people who are trading close to the news events. And I talked about the lady, Miss Peterson or Pearson, who was telling during the JP market scandal, which was that she was watching her trades, and this was a huge economic event, and she lost millions. I forgot. You guys are gonna have to correct me on this. I forgot how much it was she lost, and essentially, she didn't have a stop loss, and system goes down. All of a sudden, system goes down, and by the time the system goes up, the position has changed direction. So it's not just stop loss or blown your account completely. So they take advantage and they make a lot of their money through system failures. And in the T's and C's, they always say that they don't refund you for things like that. They don't refund you if something happens which is out of their control. They don't refund you if somehow you don't set stop losses or you blow your account. It's how they make a lot of their money. So the broker always wins, in terms of like the big bucks, which is why, like, if you don't know, the guy from JP Markets, he was actually a trader. If you don't know, if you go through his LinkedIn, you'll see that he started off as a gold and commodities trader, and then he was like, you know what, this is a good life, but there's even more buck to be made as a broker than as an actual trader. So he left his job in a bank and he started JP Markets. And which is why, like, people like Jim Simons, as famous as they are, a lot of people don't know who Jim Simons is, but they do know the Wolf of Wall Street, who was the broker, and how he made a lot of his money through his brokerage. Same thing with now JP Markets. I would put him at the level of the South African Wolf of Wall Street.